Hey, this is John Rickgarn here, creator and founder of the Wealth and Freedom Nexus. If you've been following me for a while, I have my podcast, I have my website, my blog, and YouTube channel that you can all follow these, as well as Twitter and Instagram, to continue your journey towards financial freedom, learn investment tips, tax saving strategies, offshore investments, asset protection, cryptocurrency, just a few of the topics that I have covered and continually covered. Now, for the month of April here, April is actually Financial Literacy Month, and not a lot of people know that. And in addition to that, as a real estate investor, a real estate agent, as well as through my various networks, I get asked numerous times, hey, I'm interested in investing in real estate, but how do I start? Or how can I start? What is a way I can get started in real estate investing? So after much thinking and wanting to match this up with one video per day, I wanted to create 30 videos. My goal is to keep them 10 minutes or less of 30 ways that you can get started in investing in real estate. Some will start off with very low dollar commitments and time commitments, and some might be a little bit more taxing on that, but wanted to cover 30 ways that you can get started investing in real estate. So with that, here is April 1st. We're on Friday and day one, and we're going to be covering publicly traded REITs. And I'm going to share my screen here real quick. All right, so start off with REITs. Now, REIT stands for Real Estate Investment Trust. High level, this is a company that pools a lot of investors' money and they invest in real estate projects, which can be very diverse. And we'll get into that here a minute ago, whether it's single family homes or apartment complexes, maybe a combination. And with that, the proceeds, they pass that along to their investors. And investors can buy into this by essentially buying shares of the company, whether you want one share or want numerous shares or whatever the case may be. So that at a high level is what a real estate investment trust is. Very easy to get into, very low dollar commitment. If you have a traditional IRA, Roth IRA, 401k through work, many times you can invest in these. So I'm just going to go here to Yahoo Finance. It's a website I recommend to look up stock symbols, get info on news, if there's dividends coming or whatever the case may be. And this is not a list of recommendations. These are just stocks that I personally invest in and like myself. So I'll start with AMT, American Tower Corporation. Now, AMT, as you can probably see in the name tower, this is actually in relation to cell phone towers. So if you think of real estate, these are towers that allow people to utilize the cell networks. I think everyone, myself included, has a cell phone. And with those cell phones, they need towers to connect people and send traffic. And as we are going into a 5G world, more and more traffic or bandwidth is needed in order to get videos and live streaming and podcasts and YouTube videos to the end user's phone. So personally, I don't see that going away anytime soon. So like I said, I just want to highlight a first REIT here. American Tower Corporation is a company that invests and builds and maintains cell towers throughout the United States, but also throughout the world, and shares obviously the proceeds in the form of a dividend. Now, this company has seen quite a bit of growth over the last year and even 5 years. Currently, right now, at the time of this recording, about $5.60 for a dividend or a yield of 2.24% on an annual basis. Right now, obviously, with the stock market at all-time highs, record low interest rates, higher inflation, etc. Currently, right now, the yields are pretty low across the spectrum, but just wanted to highlight that this is a easy way to get into real estate investing. Another one I'll highlight here, Crown Castle International. I'll just kind of say this is basically a data center REIT. Basically invest in hardware and the backbones for working internets, data centers, and so forth. So kind of in conjunction with the cell towers, if you will. This time it's getting about a 3.2% dividend yield, slightly up over the last year has been up and down. But you can get in for about 185 bucks per share, or if you have account through Fidelity or many custodians now, you can actually buy fractional shares. So you can buy $5 worth of a stock or $500 worth of a stock. It doesn't need to be in even increments. Next one I'll highlight, which I personally think, and again, this is not a recommendation, this is just kind of what I see, is another real estate investment trust that goes under the ticker DOC, like a doctor, basically. Hopefully my internet speeds up here. So yes, this is short for the Physicians Realty Trust. As you can probably tell from the name, this particular real estate investment trust invests in commercial office buildings that essentially are tailored to the medical industry. If a doctor, a psychologist, a specialist needs to rent out space in order to have their practice, they can rent from this company. Obviously, this company collects the rent and distributes the proceeds in the form of a dividend. Right now, this is yielding about 5%. So obviously one of the higher ones, lower entry point. Myself personally, just with the silver tsunami, as it's called, with baby boomers retiring, last I checked, about 10,000 people on average a day are retiring. I think by 2030, about 1/3 of the population is estimated to be 65 years or older. So obviously there's going to be a large demand for doctor visits, assisted living, and pretty much any services tailored to the baby boomer generation as they age and typically need more healthcare, more doctor's visits, etc. Moving on, I'll go into another REIT, which is basically like a data center REIT. Now, maybe you are familiar with Amazon Prime, your iTunes account, or Google Drive, or I can name numerous things where essentially all these documents, these videos, these audios, whatever the case may be, they are essentially stored in the cloud. And all those files, the terabytes, petabytes, I don't even remember what comes up after that, but it's a lot of data that needs to be stored in the cloud that can be easily accessible, is secure to prevent hacking, wrongful use, and data theft. So with that comes into play Digital Realty Trust. And essentially, these are large data centers that numerous companies contract out with to store their data, back up their data. Maybe they keep everything in the cloud. Maybe it's a hybrid. Maybe they just use it for backup services. And as data is continuing to increase at a geometric rate, we could just see on YouTube and streaming services, pretty much everything out there, the amount of data is just going to continue to grow and grow and grow. So myself personally, again, not a recommendation, I'm not a financial advisor. I foresee Digital Realty Trust being a nice play in anyone's potentially Roth IRA. I'll get into that in a second. And at the time of this recording, yields about 3.5%. So if you're getting 0.1% in a bank account, I think that's obviously a little bit better. And last time I checked, the average dividend yield in the S&P 500 is about 1.3, 1.4%. So considerably higher than that. Then, like I said, I could go down the laundry chute of options here, but I just want to center on what a publicly traded real estate investment trust is. I'll start off with, or I'll end here. Fifth one that I myself have invested in for, boy, I don't even know, at least a decade through my various IRAs, and I invested in it quite a bit when I had my previous W-2 401k. So realty income invest in a large range of real estate investments and real estate investment projects. The one thing that I highlight on this, and many people have conned it or coined it, I should say, as the monthly dividend company, as this is one of the few stocks, REITs, etc., that pay dividends on a monthly basis. More often than not, dividends are paid on a quarterly basis. Some are even on a semi-annually or annual basis. Realty Income pays dividends month in, month out. Last time I checked, I think they had a track record of like 16 years straight of dividend payments. So if you're receiving those dividends, um, with ownership of that investment trust, and reinvest those funds to buy more shares, currently at about a 4.3% dividend yield at the time of this recording. I think overall that's a pretty good investment. And, real estate is one of those things that I think is always going to be around, whether it's, assisted living, apartments, commercial buildings, like we mentioned with the physicians and realty trusts. And obviously the supply is dwindling, supply is pretty stagnant, but the demand is high. So those are just five, again, not recommendations, but real estate investment trusts that I personally invest in. That this is an easy way to get started in real estate investing. Don't need a lot of capital, don't need a lot of expertise, and you can obviously buy and sell these stocks or real estate investment trusts very easily. It's very easy to exit as well. So just to highlight, Merit AMT, CCI, DOC, DLR, and O. Excuse me. Now, finally, for just closing, one thing I wanted to mention in regards to real estate investment trust, the IRS looks at these a little bit differently than your quote traditional companies, your JP Morgan Chase, your Wells Fargo, your Disney, whatever the case may be. And you might hear the term qualified dividends or non-qualified dividends. Qualified dividends, basically IRS treats at a lower tax rate. So an example of this would be if you own JP Morgan stock, you receive a qualified dividend, then typically you're taxed somewhere between 0 and 15%, but everyone's tax situation is different. In a real estate investment trust, they are treated with the tax code that the trust itself or the company does not pay any corporate tax. But in order to do that, they have to distribute, I believe it's at least 90% of their net earnings to their shareholders. So this is one reason that you probably will see a lot higher yields in REITs than your, other stocks, whether it's banking or food service or, Clorox or Con Edison or whatever the case may be. Now, here's getting into the downside. With real estate investment trusts, since they are not a qualified dividend, they are a non-qualified dividend. So what does this mean? Essentially, if you own this yourself in your personal trading account, your TD Ameritrade, your Robinhood, your Fidelity, whatever the case may be, instead of getting taxed somewhere between 0 and 15%, you are actually going to get taxed at your highest marginal tax rate. You're actually going to be taxed at your ordinary income tax rate. Again, everyone's tax situation is different, and this could be, mid 20s, maybe even high 30s for your taxable hit that you get on this. So, paying 30% tax versus 15% tax, being that is a structure of a non-qualified dividend versus a qualified dividend, can be a little bit hit to the bank account. My word of advice and personal opinion on what I personally do, all the REITs that I've mentioned, as well as some additional ones, I personally invest in my Roth IRA. Once money hits a Roth IRA or a Roth account, it is basically a tax-free account. So that account can compound, that can grow tax-free for 20, 30, 40 years, whatever your working career is. And later on, when you hit at least 59 and a half, you are not required to take distributions, but you certainly can. But all those distributions from that point on are tax-free. So essentially it's a way to get around that higher tax that you get. Obviously, you're not going to get the income today, but it's a way to utilize the tax code in your favor to basically receive income that is not favored as much from taxes and get in a tax-free way. So, like I said, not financial advice. This is just what I personally do. I invest in all the real estate investment trusts that I mentioned in my Roth IRA through Fidelity, and just simplifies my tax filing. So, with that, I'll probably end the video here. I hope you found this educational. If you do like it, feel free to like the video below, hit subscribe so you never miss an episode. And I will follow up tomorrow with day 2 of another way that you can get started in real estate investing.